Of the only reason why I care about this rally, remember, the only reason why I care about this is because it's coming up off of a higher time frame key level, and I told you what that was, right here. And at this point, I don't believe we would have done that just to stop here. I think it's going to run for buy side liquidity above here now, based on anytime I see a 15 or hourly changes day delivery off of a higher time frame key level. Once again, this is only important because we have a higher time frame key level. And sell stops have been ran. Anytime I see this right here, see this down candle, the offer price down, swept sell side, changes day delivery above the opening. Nice rally there. My eyes immediately jump towards, okay, who's making money? Obviously up here and here. So right now I'm going to go ahead and map out and annotate buy side liquidity. Okay, so the eyeball always goes to where I want to see price draw towards. Okay, so we're going to have that up there. Oh, see how it's leaving this out here? It's trying to get me the, it's like, come on, bro, just buy. Alright, let's check out ES. So ES has a nice rally as well. Obviously, I like that. I'd like to see it follow suit. And obviously, this is the help of the 10 a.m. news driver. So, I mean, I can't be surprised whenever 10 a.m. kind of rallies in the direction of where Trudy wants to go rather than manipulate, because 9:30 already did that. Like, you see how large the drop down here was at 9:30. So, whenever you see that, you can expect 10 a.m. to create volatility on the direction Trudy wants to go. So yeah, like I said, the draw is obviously up here. I would like to see price make its way up there. We do have a large hourly wick, but I told you guys the only time I don't care about wicks is whenever we have a 15 or hourly change of state delivery. We do have that, so that is something that I'm taking into consideration here. So I don't know, kind of thinking this can go two ways. It can really just slam up there and not really give me an opportunity, because real time, while I was kind of doing this thing right here, right, while this looks like a clean buy model and entry point right here, right, this looks very clean, but real time I was kind of having my mindset on lower pricing based on like how aggressive this drop down was, how we already cleared buy side, how we had buy or sell stops resting below here, right? I had all that in my mind, but then I see the change of state delivery that immediately switches my mindset towards, obviously, okay, where are the buy stops at? Okay, so 25% of the wick, sell stops ran below important midnight opening, and as Ariel mentioned, new day opening gap right here. Here's that true day opening. We're below that as well. Okay, now we have no problem whatsoever expanding not only above this down candle, but also straight through new day opening gap. So whenever I see that type of stuff, I expect it to speed run to wherever buy side liquidity is, which is right here. All right, so what I'm looking at here is I want to see with this retracement how short-lived it is. Like, I don't want to see us like start dropping down and keep dropping down and enter some type of high resistance state of the marketplace after it's like, oh, okay, yep, here you go, guys. Here's a low resistance environment, and then I'm going to drop down, and then as soon as you enter, I'm going to enter a high resistance state. So, okay, obviously I like what we're doing here, right? We're steamrolling past an opposing for very gap right here. We create change of state delivery above these two consecutive down candles, right? I don't want to see us wick off this high here. I want to see us stay very strong above that. So let's check out. So stop would have to be comfortably below that inversion gap, so about 39 handles. So I'm looking at the micros here because if I buy this, right, I'm going to be opening my stop loss a lot more than that 20 handle. So I'm thinking I'm going to go ahead and buy this on the micros due to the volatility index, of course. And yeah, I'll go ahead and put 2 there. And then stop loss will be rested neatly below that inversion gap. And then go ahead and add 2 more. So what I'm looking at, okay, especially on ES, like this looks great to me. Okay, but I don't want to use full contracts on a volatility index like this. We create the change of state delivery. Notice how we're kind of sitting on top of this down candle. I would expect to keep us higher off this, obviously the high and the opening respectively, and rally us higher. Okay, and then we look at ES. You can see it drops down here. And if you go to the 5-minute chart, okay, you can see that it's anchored on this 5-minute down candle. So I'd expect that to obviously kind of utilize this as a form of support, right? And then send us up into buy side. So like how I view model number 2, right? This isn't particularly a great example of what we deem as model number 2 because this down candle wasn't formed at equilibrium. However, we're kind of viewing it as the same, type of idea. So stop loss below that fair value gap, and then stop loss is also rested below, nicely below midpoint of this down candle. And then 25%. So 25% was already worked in, right? So I'm going to put the sell limit up there at midpoint. And that's it. So that'll be my runner. And with that, that's obviously, this will offer us about a 1 to 3 risk reward ratio after the partial, and then obviously the full terminus. Okay. All right. So ES and Nasdaq both collectively rallying up off of that, the respective levels that I mapped out, but I'm not too convinced in this right here. Like, it's not really rallying up in a smooth fashion. It's just kind of wicking back and forth, which is fine, right? I can sit through that, but we'll watch and wait. Now, the question is, okay, why is this entry point valid? Well, all I'm doing is utilizing a higher time frame change of state delivery, right? Understanding that this will not be traded through should it run through buy side, right? So this down candle will not be traded through in a bullish buy program, right? So I'd rest my stop below midpoint of that and understand that buy side is yet to be tagged. So if I'm buying after buy side's tagged, okay, what do we call that? That's chasing price, right? So obviously that's, not the case here. All right, so obviously a nice rally there. So kind of my goal with this trade here, watching it right now, is pretty much just paying my grocery bill for this month, to be honest. So that's kind of what I'm coming in here with the mindset of. And listen, you say grocery bill nowadays. Maybe back then you would have taken that with a grain of salt, but nowadays it's pretty high. I think I'm spending about, for a family of 3 here, I'm spending at least a little over, probably $700, a little over $700 a month on food. So obviously that's a lot. But it is what it is. All right, so I like obviously the feedback I'm getting on my trade here, so I'm going to go ahead and trail stop up. So what we're doing is we're cutting risk in half, and then of course letting our profits run. All right, there we go. So there is, I was trying to modify it to the actual high, but it gets me up a little bit higher, so that's even better. So we take our partial, of course, so I'm going to go ahead and anchor stop close to break even. So we're partialed out at 364, about 65 handles there, and then we're going to hold the runner like I told you guys. Now that we're essentially risk free here, I'm going to hold the runner for up here. So remember I told you, watch this 60-minute inefficiency up in the premium. Okay, that's really the main focus here at this point. I mapped out the 15-minute, and then here's going to be that larger hour with the gap. Okay, so I wish, this technically is model number 3. The only thing is it just was not formed. Like, I know, like, basically I know what smart money was leaving behind in terms of footprints, but like it wasn't exactly precise as their placement. So their placement was not all that there today. But typically you'll see this type of phenomenon take place around equilibrium. So technically this is model number 2 that I'm executing on with you guys. But it just, the damn market makers placed it a little bit off today. Offshore. So, okay, I'm actually glad you asked that question. So are you concerned about buying at a premium? I'm not, because of what I explained here. So whenever I'm buying a down candle and I'm expecting that to be utilized as support, right? I'm not like if I'm convicted in buy side, right? First of all, like I said, as long as you're not buying after buy side, like if you're buying right now after buy side's tagged, that's what we call, that's obviously chasing price. But when you're buying and we have yet to reach a higher time frame key level, right, that's valid. And in this case here, it makes it more valid because we're executing on one of our models utilizing this 5-minute down candle, understanding that this should not be traded through prior to attacking buy side, right? So we wouldn't want to see something like this. Like this is not your, like this is not a buy program, okay? Like, can it happen with like a really oddly manipulated day? Sure, but this is like a very rare phenomenon, and it's just not something that we're accustomed to. Just a little bit shy of 100 handles of a runner there, so obviously I like that. No. All right, so I'm gonna go ahead and trail right there. So what did I tell you guys? This is what I'm doing going forward. When it gets ridiculously close to the buy or sell limit, I'm trailing stop this close. So there we go, boom. So there's 90 handles total. Okay, that pays my grocery bill for the month, so I'm gonna lock that in and withdraw that, and that's the business there. So